Good morning. Welcome to Trading Hour. It's a Friday morning and things are looking up. The onward march, the recovery march for our markets continue for the fifth day in a row. And what a week it's been for us. The Nifty is up more than 4%. The mid-caps have rallied more than 7%. We'll talk more about it. You're watching this, CNBC TV 18 live from the Motilal Oswal studio. I'm Reema. With me is Vivek, and that's the picture for the markets this week. As I said, the Nifty is up 4%. The mid-caps are up close to about 7%. Small caps are up 8.5%. But the sectors which have led the rally were the beaten-down sectors, the ones which got bruised the most. Capital good names, defense stocks. The two large sectors, banks have performed in line with the frontline indices. IT stocks have faltered a bit on account of growth concerns emanating out of US. But it's been, a splendid week for our markets.
Absolutely nothing to complain as far as this particular week.
And even today we're at the day's high.
And even right now. And remember, quite a lot of positive news is yet to come. The second half of the session, what we'll actually see is close to $1.4 billion of inflows. And this is on account of the FTSE rebound. Mid-cap, small-cap index both up over 7%. Mid-cap index, small-cap index up over 8% just this week. And all of the sessions of the week, we've actually seen the market rallying. So very positive data coming in, especially as far as the week that just gone by. In terms of individual stocks, the entire banking pack, all of them trading near the day's highest point. ICICI Bank up over 1.5%. It's been one of the significant outperformers in the week gone by. Even names like Kotak Bank, HDFC Bank, all of them doing very well in the session. One stock, that's in focus on the back of news flow, that's actually TBO a large block deal, actually higher than what the term sheet was indicating. So on the back of that, TBO is the stock in focus. That particular stock down over 4% today. But Reema, overall a very strong week, and banks are continuing to outperform.
So, today the bank Nifty has crossed its, I think it's crossed close, its 50-day moving average. Sorry, it's crossed its 100-day moving average today, which is 50,373. And now it's just about 500 points away from its 200-day moving average, which is 50,942. So yesterday, the 50,000 mark was conquered. Today, we're at 50,500, and all eyes will be on the 200-day moving average, 50,942. But let's invite Gautam Baid of Complete Circle Stellar Wealth now on the show. Gautam, morning. Thank you for joining in. Well, yesterday we had an FI buy. Surprisingly, the DII sold, but the foreign investors were buyers in the market. Are you skeptical about this rally, or do you think a bottom has been made? And when you chat with foreign investors, do they have conviction now in the markets in India?
Hi Reema, hi Vivek, and thank you for having me on your show. Yes, the Indian market seems to show all the signs of bottoming out, and we can clearly see the move in banks and NBFCs, and that kind of indicates that the FIs are returning back to India. I think the market is getting a sense that globally there is a shift happening away from the US markets towards other markets, including Japan, Europe, China, and now India as well. So since FIs are generally very overweight in banks and NBFCs, that is where the first sign of buying is emerging. As far as the broader markets in India is concerned, I think the worst is behind us. It's clear many quality stocks are showing signs of bottoming out, and that is where the investors' focus should be from here on. Stocks with earnings growth visibility, but with an added emphasis on balance sheet strength, good corporate governance, and operating cash flows, because those are the kind of stocks which typically recover the fastest after every sharp correction in the market.
Gautam, good morning and good to see you. Well, one stock that you intend to highlight is actually Goldiam International. That stock has corrected quite a bit from its recent peak. Do you continue to stay invested, and what is the rationale why you like this particular name?
Yes, Vivek, just a standard disclaimer, we do hold Goldiam International in Stellar Wealth Partners India Fund as well as Complete Circle Stellar Wealth PMS portfolio. Now, this particular business is a play on the structural shift away from natural diamonds towards lab-grown diamonds. Lab-grown diamonds share very similar properties as natural diamonds, and they are much more cost-effective. We have already seen strong adoption of lab-grown diamonds in the US market in the last decade. India is in the very early stages of adoption, and to capitalize on this upcoming demand in the Indian market, the management of Goldiam has launched its B2C brand, Origin, under which it plans to open 150 to 200 stores in the next 5 years. The management has guided for doubling of revenues in the next 4 years, driven by traction in exports and growth in the Origin brand. At the current price, Goldiam is trading at a 1-year forward P multiple of around 28 times, which we feel is pretty attractive. The key risk to the investment thesis in this particular business is any further sharp fall in the price of lab-grown diamonds, and also any potential big tariffs on imports of gems and jewelry in the US by Donald Trump. However, to mitigate that particular risk, the management of Goldiem recently announced that they're evaluating the feasibility of setting up a manufacturing facility in the US market.
On the subject of lab-grown diamonds, have you had a look at IGI, the company which certifies natural and lab-grown diamonds and other precious stones? Decent listing, but the stock had a one-way correction, went down to levels of about 300. Though in the last couple of days, it started moving up. Today as well, a 5% upper circuit. So from the lows of sub 300, it's climbed back to 360, but still far away from its issue price and the highs that it saw after that.
Right, Rima. I think the market has basically got spooked by comments of the industry players, including Goldiem, who in their most recent conference call actually mentioned that the need for certification of lower carat diamonds in lab-grown segment, which are below 3 carat or less, that's basically going away. So a lot of customers are not going in for certification of the lower size lab-grown diamonds. So if that is the case, and if you go by the commentary of the IGA management, they were actually betting big on the lab-grown diamonds as a segment for growth in the future. So if the need for certification itself goes away, then there is a terminal value risk in that particular business, and probably that is the reason for the recent sell-off. We do not own this stock in our PMS or India fund portfolios.
Okay, Gautam, another stock that you intend to highlight is Innova CapTab. Now, within the domestic space, this particular CDMO company, why do you like this? There are quite a few options, especially in this particular space. So why choose this one, and what's the rationale?
Well, Vivek, we are very bullish on this particular business, and we are in the process of building a position in one more listed contract manufacturer in the pharma industry. Like you mentioned, there are other listed peers as well of Innova CapTab. Now, Innova CapTab basically focuses on contract manufacturing for domestic formulation companies in India. The company does have a few other business segments like international formulations, APIs in regulated markets, but the primary revenue driver is contract manufacturing for domestic formulation businesses in India. Now, Innova CapTab is a very interesting financial leverage play, and that financial leverage will play out in two ways. Firstly, the majority of the high-cost legacy debt has been fully paid off from the proceeds of the IPO last year. So going forward, because of that reduced interest cost, the profit after tax will get a big boost. Secondly, the company has recently commissioned a new plant in Jammu, and after accounting for the interest subsidies from the state government, the effective rate of interest on that particular plant is just 2.5%. So the return on equity of this particular company is also set to rise sharply from the current levels. Apart from these two factors, the implementation of Schedule M, or what is also known as good manufacturing practices, which is being implemented and which is a law from the Indian pharma regulator, that should also act as a further tailwind for contract manufacturers like Innova CapTab, because now the domestic formulation companies would like to partner with those contract manufacturers which are more sizable, which are bigger in size and scale and more credible. So that will add an additional tailwind to this particular company. At the current price, the stock is trading at a 1-year forward P multiple of just 25 times, which is pretty attractive. The key risk to the investment thesis for Innova CapTab is any further intensification of competition, because this particular industry of contract manufacturing for domestic formulations is pretty fragmented. So any increase in competition may lead to a pressure on margins in the future.
Thank you very much, Gautam, for joining in. Vari Energies is moving up. The stock has moved up close to about 2% today. Nuvama has initiated coverage. It's a Braveheart buy. Their target price stands at 2,805. While they agree on account of competition, margins may moderate for the company. Vari Energy is the stock that we're talking about, but they believe that the stock is a play on the multi-decadal renewable energy and green hydrogen opportunity in India. But you've got to be brave to buy it. It's a Braveheart call. And the recent high on the stock was about 3,743. It's had a sharp fall, but today some buying has emerged on the back of this Nuvama call. They've pegged the target price at about 2,800. Get into a break. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today she's focusing on copper.
Well, I'm doing that because while the gold is taking a bit of a breather, we've seen the copper prices run up quite strongly. So when you look at the copper prices in two major markets, whether it's LME or COMEX for that matter, we've seen prices gain quite strongly for this year. So while on LME, we've seen copper prices gain up by 15%. In the US markets, copper has gained up by 28% right now. So when you make those calculations, we perhaps have it all-time highs in sense of LME markets in the US markets already. Well, copper is trading at a 13% premium in the US markets right now, and there are various factors for the prices to be trading on the higher side. One, it is the US dollar index, which is trading at a 5-month lows. Second, the US Fed signaling that 0.5 percentage point of a rate cut is what you can anticipate by the end of this year has been supportive. And then there are tariff fears. There are statements from Goldman Sachs and Citi suggesting that by the end of this year, US would have imposed 25% of copper imports as well. Now, US imports 45% of its copper requirements. So that's going to be a big chunk that we will see tariff coming in on. And copper, remember, is used in conventional electrics, AI, and the new green energy as well. So there's going to be a lot of implications there. Fourth is that the traders now seem to be redirecting shipments away from Asia and London into US ahead of this potential tariffs that you could be looking at. And then it also is about speculative funds, money managers also covering their short positions. That has led to this huge run-up in case of copper prices. And then China also has put out a statement suggesting that they are going to be increasing buying many of these metals to add to their strategic inventory there. And many of these metals are going to be about nickel, copper and cobalt. And we've seen prices run up in all of those metals.
Thank you, Manisha, for that. We will slip into a very short break. On the other side, we'll invite the management of NCC. The company yesterday won an order worth a little more than 2,000 crore rupees from Andhra Pradesh. More details with Neeraj Sharma. Welcome back. NCC is the company on our radar right now. Yesterday, the company won an order from the Andhra Pradesh Capital Region Development Authority. The order was for construction of roads and allied activities. The overall order size was about 2,129 crore rupees to be constructed over a 3-year period. Neeraj Sharma, the head of strategy at NCC, is now with us on the show. Thank you very much, Mr. Sharma, for joining in. So first, will the entire 2,130 crore come to you, get accounted to you? Because you've written it's on a percentage tender basis. Secondly, what are the margins you will enjoy? And with this order now, are you on track to get 20 to 22,000 crore of order inflows for this year, as you had earlier guided?
Yeah, very good morning, Dima. You are absolutely right. You know, this whole order will go into our order book. And with this order, you know, at the start of this financial year, we had shared with the street an order inflow target of 20,000 to 22,000 crore. And as of today, we have already booked 15,956, or we can say that about 16,000 crore, which is about 80% of the lower band. And during the last con call also, we have shared with you the fact that we have decided to retain this guidance, and we are very hopeful of achieving this number, which is at least the lower band, 20,000 crore.
Okay, and the margins on this particular order win, and will you be getting the entire 2,100 crore rupees, the scope of your work?
That's right.
Okay.
The whole order goes into our order book, and we will get to execute the whole part. Percentage tender means something different, Oh. This is a process of award. So to answer your question specifically, that is something that will go to our order book, and we will get to execute the complete part. Margin, as a matter of practice, we do not wish to talk about margin project to project. We have a lot of projects, about 150, 160 odd projects. So all we do is about this FY25. We have already talked about the EBITDA margin of 9.25. And as we speak, we are hopeful to, achieve that number.
Okay, is there any downside risk to the already reduced revenue guidance of 5% that you've given for the year, 9.25% EBITDA margin guidance? We are now almost at the end of Q4, so you would probably have a good sense of the numbers already. Any further downside risk in terms of execution?
We don't see. But let me try to answer this question a little differently. To understand where we are going, we have to also, try to see from where we are coming. The last 3 years, if you really see the, revenue CAGR, it is upwards of 35%, and the profits CAGR of more than 40%. So the point that I'm trying to make here is, the base itself is, substantially high. So in an year, that is quite unusual in several ways. Firstly, in FY25, we have seen central government elections, followed by, elections in a couple of key states,
right,
in which we have a lot of exposure. So it is
right,
this 5%, the 5% guidance that we have shared with the state. We are quite confident of, achieving that number.
Understood that. Mr. Sharma, coming back to Andhra Pradesh, a couple of points that we want to ask you. Number one, is this order part of the new capital formation that was earlier guided towards? Is this order part of that? Now, what is the fresh order pipeline that you have as far as Andhra Pradesh is concerned? Because, that has been one particular state that actually has given you quite a lot of trouble in the past. And also, from earlier pending projects, what are the receivables? Are you hopeful of getting any of those receivables back?
3 questions. The firstly, you are absolutely right. This is one of the first projects that has been awarded for the new capital city that is getting constructed in Amravati. So this is just start of that process, and we are fortunate to bag one of the key projects at the very beginning. The second part of your question was, the pipeline. We understand that, the government, the state government, in consultation with the central government, is planning to spend about, 64,000 crore total to develop, this new capital city. And we understand that they have already approved about 59 tenders, more than 37,000 crore. We hope that, all these projects should get awarded in next couple of months' time. So we are very hopeful, and we believe, this trend should continue, and at least in the next couple of months. The third part of our question,
please go ahead. Complete the point.
Yeah, the third part of your question was, our payment outstanding from the old project. We have to receive about 150 odd crore for the work that we had done in the past. That is in year FY18 and 19. We are quite hopeful of, receiving that money as well, by end of 31st March.
Mr. Sharma, just to circle back to the point about Amravati and the developmental projects which are planned. 64,000 crore has been earmarked. Of that, you're saying 37,000 crore worth of, divided into 59 tenders have already been let out. Is that correct?
Approved. What it means is the principal decision has been taken in the process, as I brought to your attention. In the next couple of months' time, we expect all these tenders to get awarded.
And out of these 59 tenders, you will participate in how many?
We have participated in most of them, wherever, depending on a project and we try to see several factors. For example, what is the nature of the project? What is the value of the project? What would be possibly the prevailing competition, in that package? Accordingly, we participate, in most of the packages.
Understood that. Mr. Sharma, also give us a sense of the typical win percentage that you enjoy every time you participate in tendering. So out of every 10 projects or 100 projects that you do participate, what is the typical win percentage? The second question is, you said that out of the 150 crores of pending receivables, you're actually hopeful. Could you repeat that once again, of receiving it by March 31st, 2025?
That's right.
And the win percentage for tenders?
There is no really win percent as such.
Or a historical average that you could give us, yeah.
It keeps changing, but if you insist, I will put that number, anywhere between 15 to 20%, but that keeps changing. It depends, the bulkiness of a particular project, how many projects are being awarded, what kind of projects are being awarded, what is the prevailing competitive intensity, in that space. So it's an outcome. It's an outcome of all these factors.
Do you think the order inflow guidance for FY26, you'll give that out perhaps in a month or so, but directionally, do you think it could be higher than FY25 considering the large tenders you've participated in?
I do not really wish to speculate on this. The way we function is, after the end of this financial year, in month of April, we will try to, review all the projects, try to look at all the opportunities, then try to come out with a possible number. And I would be happy to come to your show, give us some time by end of April, and talk about what is the order inflow, guidance number that we have for you.
Love to have you back on the show. A quick word before we wrap the interview. What is the current debt on the books right now and your debt reduction plans?
As of third quarter, as of December, it would be, close to 2,400 crore. But as you are aware, in our industry, generally most of the payments are expected to come, in the last quarter. So this number should go down.
Okay, Mr. Sharma, thank you so much for joining us, giving us a sense of the order books, the sense of the prospect pipeline as far as Andhra Pradesh is concerned, and some very positive flow news coming in terms of pending receivables from Andhra Pradesh. But let's now slip into a short break. When we return, we will discuss market technicals with Mitesh Thakur and also his top trading bets. Welcome back to Trading Hour. Well, one stock that's been in focus over the past few days has been Ola Electric. There have been some discrepancies which have been reported in sales and vehicle registrations. Parikshit is here with the details and what the company has to say.
Right, Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industry is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18 that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates and showrooms are facing inspections in several other states including Madhya Pradesh, Punjab, Karnataka and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear replies. But now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared. But clearly, Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well. And those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Thank you very much for that ongoing story, developing story. Let's also listen in to Maharashtra Transport Commissioner speaking exclusively to CNBC TV18 on this particular issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and I'm getting the reply from them. We'll take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises.
Well, a lot of news flow, especially regarding Ola Electric. Despite that, today the stock has seen a bit of a bounce back after the recent sell-off. But moving on, technical analyst Mitesh Thakur now joins in for a quick technical check on the market. Mitesh, we've seen buying emerge on all days of the week so far. Do you think this positive momentum can continue as far as the indices are concerned?
I think, good afternoon. We are now nearing the immediate targets on the bank Nifty at least, which was around 50,500, 550 zone. We are practically there. And the Nifty, while there's somewhere more to go, I think we are slightly overbought. So the idea is that while the bias at the directional preference remains on the upside, a good way to trade would be to take some profits and tighten your stop losses a little bit. But yeah, keep exploring stocks which are giving you good reversal patterns from lower levels, and I think that's the way to move forward.
I remember yesterday you talking about levels of 23,550, 23,600 on the cards for the Nifty. What about stocks, Mitesh?
Yeah, on the stock side, again, we'll have all long calls, so have a buy on Oil India, keep a stop. This is a buy above 396. We had a high of around 395 half day. So once it crosses this 396, 397 zone, buy with a stop at 392. Look for a target of 410. And also a buy on Patanjali with a stop at about levels of 17 and 45. And a target of around 1830 can be.
Thank you so much, Mitesh, for joining us and giving us a quick check as far as the technical aspects of the market are concerned. But time now for a short break. On the other side, we will be joined by Skanda Prasad Seetharaman, the CFO of Vatek Wabag, to discuss the company signing a non-binding term sheet for formation of a dedicated municipal platform. Welcome back to Trading Hour. Well, today a very interesting news development that has come in as far as Vatek Wabag is concerned. The company has informed the exchanges that it will form a partnership to go ahead and form a dedicated platform for capital projects in the municipal sector. To discuss more on this, we are joined now by Skanda Prasad Seetharaman, the CFO at Vatek Wabag. Thank you so much, Mr. Seetharaman, for joining us. First up, give us a sense of this particular development. Is this mainly for Indian domestic municipal corporation orders that are expected? And what will be the role of you as well as your partners? We understand that there are 3 other partners who are stepping into this particular platform.
Good morning, Vivek. Very good morning to all your viewers, and thank you very much for having us on your program. Yes, this is a very strategic development for Wabag. This is an equity partnership that we have agreed with the marquee international investors to invest up to $100 million jointly in municipal sector water treatment projects. All of those will be on PPP basis. This is in line with our long-term strategy to remain asset-light and develop long-term partnerships. And through this partnership, we will be able to focus on what we are best at, which is our technical expertise in EPC and O&M, while the financial partners will bring in the required capital. So this is going to be an equity platform where WABA will take a minority capital investment, which is in line with our asset-light strategy. Majority capital will come for equity from the international investors, and jointly this capital will be invested into PPP projects. And this will focus on the municipal sector, primarily in India and in select countries in the emerging markets.
Got it. What would be your financial commitment? You've said it's going to be minority, but could you put a number to it?
See, Rima, we have not taken more than 26%. That's going to be the maximum stake that we would like to take. So we would remain minority when it comes to these equity partnerships.
But as of now, maximum is 26%. What's the upfront amount that you have put in as of date right now?
So this is a non-binding term sheet that we have signed. We are now progressing on the diligence and definitive agreements. Once that is done, the capital investment will be committed, and this will be drawn in the ratio that is agreed between partners on a project-by-project basis.
Understood that. Now, give us a sense of the upcoming municipal project or the prospect pipeline. First, you give it for us for India, and typically explain to us, when such projects do come up in the PPP, route, what is the equity that you need to put in? What is the kind of debt that you get in? And with your partners on board, do you now get access to cheaper funding?
Yeah. See, we've seen in the last few years, the water sector has moved from a contractor model to a performance model. And PPPs are an important factor. So what happens is you get EPC followed by a long-term O&M, which is where you take long-term commitments. And here is where it will differentiate contractors from real water technology companies. And WABA having more than 100 years of experience, we are already having a lot of long-term contracts. We are well experienced to get into this. So the way this will work is that the equity capital, that the debt equity ratio is usually about 70-30, 75-25. So this 25 or 30% as required by the project will be put in by the platform, and the remaining will be raised through debt. Of course, we have already raised debt in our existing PPP projects from marquee debt lenders like IFC Washington, Asim Infra, and Tata Cleantech Capital. So with a partnership of this kind with very well-known international investors, I'm sure we will have better access to capital, and there will be a much higher credibility for the platform as such. And the debt lenders should surely be more confident about this sector.
Point well taken. How soon before, when do you think you will be able to complete all the regulatory approvals and get this platform up and running, and you can start bidding? What's the timeline that you have in mind?
See, already we have a few seed projects, and we are preferentially placed on a few projects. So the projects are there to make the investment. So the avenue is already there. In terms of the process, I think right now we are in a very good stage in terms of our diligence and working on the definitive agreements. I think over the next couple of quarters, we should have this up and running.
Couple of questions, Mr. Sitaraman, request you to answer them a little quickly. Number one, prospect pipeline, both India as well as other emerging markets, typical win ratio there. We also understand that typically in these projects there is always an issue of receivables, which even you have faced in the past. So how do you intend to go ahead and face these issues? And number three, whenever we talk about Vatek Wabag, quite a strong order book already in place. Will you transfer a few of the existing pending orders to this particular platform?
Okay. So number one, in terms of potential of this sector, our capital projects team has been working on this over the last few years, and we see with this platform also forming in line with our strategy. The sector is about the PPPs is about $1 billion in terms of overall opportunity as we see it right now, which is available for this platform to invest over the next 3 to 5 years. Number two, in terms of your question relating to receivables, you've seen our change in our strategy where we have said we will focus only on projects which are multilaterally backed, sovereign funded, federal government backed, or backed by a letter of credit. So even in our EPC projects that we are running today, 99% plus of our projects fall in one of these categories. So we have addressed the question of receivables being stuck because of government issues, funding, etc., through this strategy. And with the PPP projects, we will not be any different. Like, for example, the projects that we have taken on Namami Gange, there is an escrow mechanism. The funding comes from World Bank. There is an assurance from NFCG. So all these will continue to be the contours within which we will continue to work in this sector. Number three, we already, as I said, we already have 3 running projects. One of the projects has already achieved COD. Couple of projects are in advanced stages. Of course, these are also projects which can potentially move into this platform. And there are other preferentially placed orders where we will try to convert and bring it under this platform, and many more orders in the future. As I said, the opportunity landscape is big, and there'll be enough and more opportunities to consider through this platform.
Thank you so much, sir, for joining us, giving us a sense, and congratulations on the formation of a platform. Hope to see you soon once the Q4 results are out as well. But time now for a short break. We bring you excerpts of our conversation with Hindalco's MD, Satish Pai, over their plans to invest 45,000 crore in the aluminium and copper businesses.
Welcome back. Aditya Birla Group Chairman Kumar Mangalam Birla has announced a 45,000 crore rupee investment plan for Hindalco's copper and aluminium business. Speaking at the launch of Hindalco's new brand identity, Mr. Birla added that the investment will be used to deliver both upstream and high-precision engineered products to its customers.
We are going to now, in this next phase, expand our upstream capacity. So alumina refinery, a new one. Aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Well, very large commitment coming from Hindalco, especially when it comes to the state of Maharashtra. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime Report is up next.